Morning all. How are we all doing? Morning Michael, Andrew, David, Diamond, John, Big Papa. Follow the white rabbit. Hopefully this morning we won't see Mr. Week. Mr. Week. Right. News. Where are we? Right, so this morning we had the CPI figures for the Aussie. 7.4 on a forecast of 8.1, which is a big change for the Aussie. We'll have a quick look at the market reaction in a second when I find my pen. Where is it? There. Yeah, the 8.4 was the previous CPI year on year. We were forecasting a drop by 0.3%. What we actually got was a drop of 1%. So that's a pretty big getting on top of inflation job. Well done. GDP has dropped quite dramatically. So we were forecasting a slight increase in GDP, but what we got was a negative. It's still not recession, but it's not going the right way. So mixed messages basically from the Aussie dollar overnight. Coming up news today, we've got Bailey speaking at 10 o'clock. So he might drop some hints as to what's going on with the pound interest rates and everything going forward. So that might give the pound a bit of a whipsaw today. And then this afternoon, half an hour after the market open, we've got the PMIs for the US. So we might have a fairly weak US open while we're waiting for the PMI figures to come out. So we might find a bit of a whipsaw. So if you're going to trade the New York Open this afternoon with the opening range breakout strategy, I would avoid the pre-market 15 set file and probably use the 15-minute set file. That's going to be a safer one today because the 5, 10, 15 might be a little whippy, but we'll see. So that's the news. Looking at the Australian dollar, as you can imagine, we got an ADR. We've only got one. The New Zealand seems to be affected more than the Aussie, but so with the Aussies, there's your news. Let's go 15. So there's your news. CPI drop, push, and pump. So it is overall good news for the Australian dollar that inflation is coming down, as you can see. So we've had decent pushes. The yen, we've had the bigger push, which just gone straight up into resistance and bounced off. But yeah, so overall good news for the Aussie. Inflation comes down way bigger than expected. So if we have a look at the key fundamentals for the Aussie. Morning, Jacob. Where are we? Aussie. So we're now down to 7.8. Is that right? No, that's previous figure, isn't it? Hang on. Whoa, there. 7.4. Yeah, so this is obviously yearly. The fundamentals are measured quarterly. So these are the quarterly figures. So that hasn't updated, obviously. So yeah, doesn't make a lot of difference, does it? But yeah, interest rates 3.35. So with the interest rates, they go up in 0.15s a lot of the time. Last time was the first time we had a 0.25. So this 0.25 has only happened recently. So the impact of this is not going to be shown in the inflation figures. So they're ahead of the curve, I think you will find. Their inflation is the third largest in the world at the moment. Still not pretty much close to the New Zealand. So I think this is probably going to be positive Aussie moving forward. So it really is going to depend on what happens with their unemployment. If unemployment can remain stable with inflation dropping at those interest rate levels, we may see them put a pause on that. So we'll have to wait and see what happens. There's no press conference or anything with interest rates. So it's just a case of waiting to see what the market reaction is. But overall, it looks pretty positive. Aussie's coming down against New Zealand. If you look at the New Zealand dollar, that's flown this morning, which is bizarre. So the New Zealand dollar's had the biggest reaction to the Australian news. We got a 150 ADR. We just had a reversal alert there on New Zealand yen, 150 ADR. So nice one to jump into now. Got to be quick. Nope, you're missing it. Too slow. But yeah, that's coming down really fast. So there's quite a few ADRs there. Let's quickly whiz through them. Aussie yen. Whoops. Aussie yen. Yeah, reversal at 125. That's coming off nicely. Euro US. Is this US dollar weakness we're seeing? Or is this euro strength? Mixture. Slight euro strength and slight new US weakness has obviously given this a push, but we're coming out to key resistance here on the 5 minute. So you'll probably find we're going to get some limits triggered. This is yesterday's high. There you go. You saw some limits trigger there that popped back down again. Market's open in 2 minutes. So good ADR reversal there. Expecting pound strength, US dollar strength this afternoon off the PMI figures. So that looks like a beautiful ADR reversal there. New Zealand dollar CAD. Wait, you're not going to get a reversal on this one, actually. So that's a tricky one to get into. You're not going to get the reversal till there because of the strength of that movement. So I would wait for a bearish engulfing or a shooting star or some kind of 3-bar reversal to get into that. You're not going to get in on a reversal alert. If it does accumulate here, you will get a reversal alert high. But if it does just come straight off, so wait for some bearish price action on that. New Zealand dollar CAD pushing. So all these New Zealands are pushing hard. So wait for some kind of reversal structure to form on these. New Zealand yen, and you already have had. We've got a strong yen and New Zealand US. So there's your ADRs. We've got a weekly hit on the pound New Zealand. Obviously, it's the first day of the month. So there's nothing on the monthlies. So pound New Zealand is your weekly extension. Oh, it's already played out, isn't it? Yeah, sorry. That was so this was the trade from yesterday. Look at that. Beautiful. God, I've made so much money on this yesterday. all the pound reversals, all these RSI extensions on the pounds, yeah. Remember I said we are going to collapse hard. I overloaded on them and yeah, they all came down. All of them. Most of them. But yeah, beautiful moves on those yesterday. Morning, Stevie. Morning, Luke. Market's open. So pre-market 15 was way wide today. Huge one. So if you're taking the pre-market, you're short. We got a lovely gap fill to the downside. Looking at the DAX on the daily yesterday, we got an inside bar, basically. So we are now, remember I said yesterday morning, we were talking about this yesterday morning, weren't we? We had that is now undecided. Euro Swiss has just hit ADR as well. Undecided whether or not that is still the control candle at the moment, and this is still the range, or we have a new one because we have actually broken outside. But we did the same as here. Look, we broke outside ever so slightly and pulled straight back in. Broke outside ever so slightly and pulled straight back in. So I would kind of start to use that maybe for the range now, but obviously be aware of this level as well. So we are inside bar on an inside bar. So an inside bar, basically, which is a symmetrical triangle. So we are breaking out slightly to the upside on this at the moment. I would anticipate potentially a move back down to here for the gap fill and then potentially a rally. So on a lower time frame, that's what you would be looking for. Possibly coming up, testing yesterday's high, and then coming back down for the gap fill. But gap fills only get filled around about 45-50% of the time on the day. So I'd like it short though. That's a pretty big gap. And as we're an inside bar, basically it's all indecision, isn't it? We haven't got any directional bias. So makes sense to come do the gap fill, doesn't it? But we'll see. So far, if you're short on the pre-market, you are obviously in. So Big Papa, I am short in New Zealand CAD. Yeah, ADR. You haven't had a reverse alert on that yet, so you shouldn't really be short yet. But jumped in a bit early on that one. There you go. Beautiful move. So you're if you are using kind of this is the pre-market is a quick scalp move. So the pre-market set file that I use that I put in the Telegram group is a 1.5 hour. So 1.5 hour on this is going to be pretty tricky today. It's pretty much going to be the gap fill, isn't it? So it's around about a 30-point move. So you're looking for 45. which is pretty much the gap fill. So on the pre-market, the target is there. So we'll see. See if it gets there first. So 5 minutes still in. We've got 1.5 minutes left on this. Still waiting on the pound Swiss. Yeah, didn't get the movement yesterday off of the pound Swiss. That one's still rallying. Don't forget sentiment on these pound pairs at the moment. Oops. Yeah, right. Yeah, we've calmed down now. Good. So you remember I said yesterday, the sentiment is still short for all of these, which means that these were all positives. Yeah. Pound Swiss is still positive. That's why it's rallying today. They're all still short on it at the moment, but all these other ones that were shorts as well, they are now long. They are now neutrals. So the market, the retail crowd has scaled out of these pounds. Basically, just been stopped out of everything, haven't they? So yeah, we've got positive slightly still on pound odd, pound yen, pound Swiss. They are still very, very long on. Yeah, so 77% of the market is short. Well, we should be very long on. 77% of the market is short, so it's a long. But that is scaling out now, so that will change. Okay, so we've come down and tested pre-market levels. Pound Swiss is still very extended, though, don't forget. So, you are still extended without a profit take move on this. So there's my opening range on the 5. I'm long. Yeah, so that extension there, we got a move yesterday on it, but it wasn't very big, was it? So top to bottom on that move was about half an ADR-ish. Not a lot, is it? 4 hour. We're just putting an M pattern in at the moment. Oh, God. What was that going past? So you're sitting in propulsion at the moment on this one. So with the pound Swiss, I think I covered this yesterday, didn't I? This is the propulsion gap that started the move. So this is where I would look to be tested. This is obviously an area where we've found some sellers coming in, but more really, I think, because of the exhaustion. So gone out yesterday's high on the DAX. So yeah, I would look to add as a final position in there. They may come and take that high liquidity. So you might look at 150, 175 ADR on that potentially. But morning, Mark. Morning, Seymour. That was just a signal on my other platform. Pound odd sell. So I'm playing a breakout trade on this pound odd this morning. This is a totally different strategy, but I've got an entry there. So that's my trade basically, is that. Yeah, so the reason for the trade is this moved down yesterday and pull back short. What I'm looking for is a pullback into resistance and a drop. Stop loss is above there. So it's basically a market structure. This is a strategy that I'm playing with at the minute. So it's basically market structure, re-entries using previous resistance. So we've broken, the idea being, we've broken that resistance, that support rather. Yeah. And in the same way, we broke that support. So the market structure would be down, lower high, lower low, lower high, lower low. So I'm looking at where we're likely to bounce. So the entry would be there. Okay, DAX pulled back from the high. So just looking at the DAX, obviously, we've just done the yesterday's high, which is what I just said about taking that high out. Looking at the daily, as well as just saying a minute ago. So what we might do is come and take the daily high and then come back down and do the gap fill, which looks like what it may be attempting to do. Sorry, right. Right. So we're just waiting to see what happens with that. So that's yesterday's high sweep. So a lot of limit orders obviously triggering at yesterday's high. People always place limit orders at the highs and the lows of the previous days, which is why we get the bounces at the highs and the lows. So we'll see if there's enough sellers on the limit there to overpower the buyers. Obviously, this is the opening cash balance that's going in at the moment. So we don't know whether this is just order execution, commercial order execution. We don't know if this is now sentiment taking over or not. So we're waiting to see where the sentimental traders want to go, the guys that want to make the money today. At the moment, got 30 seconds to close on this candle. We just closed back inside the 5 minute, which was trying to, so not really going anywhere, no direction yet. Aussie dollar CAD, short at resistance and price action coming to ADR. Yeah, so this is that level. Previous resistance, support rather. We're just retesting at the moment. So it looks like a good looking short. ADR reversal. Not quite ADR reversal yet. I haven't quite hit ADR, but we have got a reversal alert on that and a retest. So we'll see if they can break that low. That'll probably flush. If not, we'll come up to ADR and get a second reversal alert in there. Not quite extended on the hourly, but we did have the extension yesterday. So anywhere in here, basically. Yeah, so this is why I drew this resistance like this. So we got that low there, and we're encompassing everything from that low all the way back to that high or that low there. That forms basically the area where we will see a reaction, and it could be any one of these. Yeah, which is why you draw support resistance typically as a zone rather than a level as much as possible. Yeah, so that's why it's good to draw, multiple support resistance lines on your chart. So when you find you're not sure, it could bounce there, it could bounce there, it could bounce there, draw it as a zone. Yeah, and when you get a touch on that zone, get in on a reversal alert. If it pushes up further into the zone, get a second reversal alert, get in. Yeah, if it invalidates that zone, it's up to you whether you get out the trade or you turn it into a position trade using the next support resistance. It's your choice, but it's a good zone I would expect to get a drop out of. In fact, where's my Aussie CAD gone? Oh yeah, I'm not using that because I'm using the 4 hour at the moment. Yeah. But yeah, that is a good level to take a short from. I might take that actually, one sec. Oops. Oh. So I'm just working on another MT4. 1 hour. Just setting that trade up on my other platform. Right, sorry. I'm back now. So we're running high again. There's your 15-minute opening range high. in as well. So it looks like we want to go long on the DAX at the moment. So that's going to leave the gap fill in place. So targets you would be looking at would be previous day's high, which is there, which is 154.85, and then last week's high, basically. It was an Aussie dollar hit. Aussie dollar US dollar has just hit ADR. So yeah, targets basically yesterday's high, and then we'll be looking at, you know, this area somewhere up there. So that would be a good target, 154.84 for a TP if you want to get out of the DAX this morning, which is up there. So second long on the DAX on the 15-minute break. Right. So let's have a look at the RSIs. Sorry, I'm just doing lots of things at once. I'm a man. I can't multitask, remember. We don't do that. Right, so ADRs. There's lots of ADRs pinging. So Aussie dollar yen we've looked at. That's already come off. That was New Zealand dollar CAD. That's just because I just refreshed the wrong chart. So yeah, Aussie dollar yen has already come off. Aussie dollar US dollar has just hit. So all of these basically that encompass the US dollar today, we've got the PMI this afternoon. So if we get a positive PMI result this afternoon, which is actually forecast, so don't forget the as expected is a positive. So if we get the as expected, it's going to be bullish US dollar. If we get better than expected, it's going to be super bullish US dollar. If we get a slight miss, it's still going to be a positive, so more likely neutral US dollar. So overall, unless we get a negative on this, which brings us back down to sort of the 47.6 level, maybe, I think we're going to get a positive move this afternoon from the US. So with everything that's hitting ADR to the upside today that is against the US dollar, you've got an opportunity to New Zealand dollar Swiss has just hit its weekly. Blimey, we're only on Wednesday. Well, actually, that's probably already when we're hitting, isn't it? But yeah, Aussie dollar, US dollar. So if you're anticipating, as I am, strength in the US dollar this afternoon, this is a good ADR reversal to take because obviously we should expect to push back down into those lows. Let's just have a quick look at the sentiment at the moment for the US dollar. So it's yeah, it's all on side as well. So the market at the moment is shorting the US dollar against the Swiss, the yen, and the CAD, which gives us a bias to go long. Gold is also a long at the moment. New Zealand and US and Euro US are neutral, as is the pound US, and Aussie US, they are long, which means we want to be shorting. So market is offside against the US dollar ahead of that news, which sounds pretty good to me. What was that? Alert. Aussie CAD, I'm in short. Stop loss on that order is 92,402. $92,402. So my stop loss is up there, around about 130 ADR, 135 ADR. So above that zone, basically. This is, as I say, it's a different strategy I'm trading. Aussie US, Euro Swiss. Sorry, just get my chat back. That's just coming off of ADR now. Reversal, that's fair way away. So it's half an ADR. Jesus, look at that. Euro Swiss, really tight ADR. You're not going to get a reversal on this until you're half an ADR away. So it's probably a load of rubbish. Others that have hit since we've looked at them. The others all we've looked at, haven't we? So New Zealand dollar Swiss. This is now its weekly range. So we've done the weekly range on this parabolic move on the New Zealand dollar. That's interesting. So Goldman Sachs expect ECB rate rise of 50 basis points in May. So we're getting 50 in March. April, not sure. May 50. So that's 1% basically in the next quarter. Up from previous quarter basis point estimate. Peak rate to rise to 3.75 in June from 3.5. So currently we're sitting on 3 for the euro. So Goldman are forecasting 3.75. How do you get that? That's 4. They can't do maths. That's not good, is it, for an investment bank? 50 basis points in May. We know we're getting 50 in March. That makes 1%. We're currently on 3. 3 plus 1 is 4. They're expecting the peak rate to be 3.75, up from 3.5. Sorry, your maths doesn't work out, Goldman. What am I missing here? So are they saying they're expecting a quarter basis point rate hike in March? They're not. ECB Lagarde's pretty much confirmed they're doing 0.5%. We'll find out. House prices have come down. Oh, God. No. Don't want that to happen. I was just looking through to see if there's any New Zealand dollar news overnight or whether this is just a reaction to the Australian GDP. New Zealand building consensus. Nah. Okay. I'm not quite sure why we've got such a strong New Zealand dollar, but we have. So ADRs, RSIs, we're massively extended. We're up at 85 on the New Zealand dollar Swiss. That's our weekly range achieved in 2 days. So yeah, look at the size of that propulsion gap. Targets that big very rarely get left behind. We are coming back there with 90% assuredness sometime in the next couple of days, week, maybe today if they do an A-shaped recovery. So that's a really good short New Zealand dollar Swiss. I would just wait for a reversal on 5 minute and get in. It's really tight as well. It's only a 13 point. If you wanted to use a stop on that, it's only 13 points. And if that does actually start, it's a 10 to 1 drop. So yeah, New Zealand dollar Swiss looks like a very nice reversal. I'm showing an unfilled 91 pip gap on gold from yesterday. You don't get gaps in gold because it trades 24/7. $18.19.01. Oh, here. Sorry. Let me just check my other platform. Five. Yeah, I haven't got that gap. It's not showing on my Forex funds. This is just a propulsion gap, basically. But even so, it's a propulsion gap. So when we get the US dollar strength this afternoon, yeah, that will be your target. So that in-pattern reversal that we've just had, that reversal alert and retest we've just had on gold, yeah, that looks good for a short to me. Defo. Right, so there's your ADRs and everything. DAX has just pulled back from that high. Have I just stopped out on that? Yeah. So I just stopped out on first position with a trailer. So it's just taken me out with a micro loss, basically, on the trailing stop on that first 5 minute opening range break, which was there. So still got those in at the minute. Right, let's look at the RSIs. Oh, wrong one. Aussie dollar, New Zealand dollar. So RSI extensions here, we're looking at the hourly and the 4 hourly. So Aussie New Zealand. So looking at the buy scorecard, if I just sort that, Aussie New Zealand is a huge sell. Wow, look at that. That's the biggest sell now, Aussie New Zealand. It's overtaken the Aussie US. So CPI figures, obviously. We've just had very, very good news for the Australian dollar. So obviously sentiment on this, COT reporting on this and everything, we just don't know whether that's accurate or not at the moment. So we need to be a little cautious, but Aussie New Zealand and Aussie US are the big sells at the moment. We're expecting that move on the Aussie New Zealand to be a continuation, which it looks like it is at the moment. The structure's definitely broken to the downside. The fact that the New Zealand dollar has reacted way stronger off of the news for the Australian dollar is odd, but anyway, New Zealand dollar is strengthening up dramatically. So this one it is a mean reversion. It's very nicely extended on the hourly, getting very, very nicely extended on the 4 hourly. So we've got a profit take move here. You can see this is coming down dramatically quick. I got into a mean reversion on this and got out just there. That was an ADR reversal, which needed 2 entries. So be careful with this if you're going to take this as a mean reversion, because obviously we are getting a massive strength at the moment on the New Zealand dollar. So I would suspect this level is going to get tested at some point. This propulsion gap, it's difficult to tell whether they're going to get all the way back there, but this one here that broke the support, that is a very, very, very nice propulsion gap. So I would expect to pull back into that. So where we are at the moment, extended on the 4 hour and the hourly, that's the kind of move I would be looking for, somewhere in the region of an ADR. So wait for a reversal alert on that, M5, and then you've got a move of a sort of an ADR. You'd be looking to come back up into that sort of area, 125. Yeah, so that looks pretty good. We are just breaking that level now as well. So the danger here on this trade is that we get a very weak flag pullback and then a new leg. If that's going to happen, we're probably going to get an ADR on this today. We're just coming down into this balance at the moment. That could be potentially somewhere there or there, the move. Yeah, or back up into that most recent resistance there. Yeah, so there's your pullback. So there's your 1 hour propulsion gap that closed, that broke that level. Yeah, so this one here broke that. So that's a good level to aim for. On the 4 hour, yeah, it's all the way back up into there. So there's your previous support, turn, resistance. Just about to get an ADR on this. So I will be getting into that on an ADR reversal. If we get it. So yeah, pulling back up into there. So somewhere in that area, you know, with my ADR reversals, I'm looking for very small moves. So you know, you can see here, that was 26 pips. The quarter of an ADR on this is 15. Yeah. So that's what I'm targeting with all of my ADR reversals. I'm just targeting quarter of an ADR, just getting in, out, quick, done. Which is what ADRs are. They're a scalp move. So that's what we're looking for in Aussie New Zealand. Very, very, very extended. Really good opportunity to get in on that. But it is counter trend. We are expecting this to continue that way. However, we've just had positive news for the Aussies, although this is a negative, look, and this is how you have to read. You have to be careful with these when it goes red. Yeah, inflation at the moment coming down is positive for a currency. Yeah, so inflation means that the economy will start to pick up, jobs should stabilize, but it also means that there's less pressure on increasing in interest rates, and interest rates are what make a currency more attractive. So it's a double-edged sword. when you get a negative figure like that, they read it as bad, and you quite often will get a negative reaction to it. But it depends what they do with the interest rates at the moment. So we're in a little bit of a different scenario at the moment, where we are battling a international recession and trying to keep the world out of an international recession. We're recovering from COVID. Everybody's in debt. It's not the norm. The last 3 years we've never had this ever in the history of the markets. What we've had for the last 3 years is just new. So right now, the whole thing is about interest rates. The bigger the interest rate, the more attractive you are, the stronger your currency is going to be. That is the rule at the moment. That's the guiding light, if you like. So when this comes down, it means that interest rates may start to stabilize, which means you're not quite as attractive as you used to be. However, at the moment, even though that is starting to come down, countries are still increasing. Look at the US. It's coming down, not coming down. It's never going to come down fast enough. Target is 2%. Yeah, we're sitting on 7.4. Still 5.4% above where we should be. So interest rates still probably will rise. But that might weaken the Aussie. So we need to be a little careful with moves that we're seeing like this. Because we could see that stabilizing. And obviously the trouble is with the Aussie, it's a much bigger economy, much bigger country. It usually does beat the New Zealand dollar. Yeah, that's what we've been used to in the past. So we'll see. But as for mean reversion, it doesn't matter. Mean reversion is mean reversion. It's going to pull back. It's going to profit take. It cannot continue to do that without doing that. So it's a good mean reversion opportunity. Euro Swiss. 4 hour, just coming up above 75. That's already played out. Oh no, oh, blimey. Okay, so that was a big strong push. That's not a very good ADR reversal, is it? 20 pips, half an ADR. So you're not going to get a reversal alert on that until in a minute. That's your hourly extension and your 4 hourly extension. You've missed half an ADR of movement on that because we haven't had a reversal alert. So that's a bit annoying, but nothing you can do. It rallied very, very hard. Look at the normal price action on this. We had like 10, 15 minutes of solid, we're off. I suspect that was a Swiss franc weakness. Yeah, it looks like Swiss franc had a little bit of a wobble. That's typically what you see. The Swiss franc just moves everything massively when money moves in and out of the Swissy. So yeah, Euro Swiss, it is an RSI extension. There's no bias on Euro Swiss. New Zealand CAD 125, still pushing. There's no real bias on this. It's such a tight ADR. It's not the best pair in the world to trade at the moment. It's actually the worst ADR we've got at the moment, I think, Euro Swiss. 41. 47 New Zealand Swiss. Yeah, it's just, oh no, 39 CAD Swiss. Yeah, so all the Swiss pairs basically just, they're not good ADRs at the moment. So you're better off putting your money somewhere else, really. But it is extended. It is an opportunity to get in on a profit take. Hard to pick a target on this one, really, because the propulsion gap that we got yesterday did not break that high. And it has already been retested. So that is really all I would look for. And obviously, you're just about to get a reversal alert. So it's just not worth taking it at the minute. I would expect the euro as well to be strong, so I am looking for buys on the euro, and just not really worth taking that as a short. Euro New Zealand, again, very extended to the downside. On the hourly, 4 hourly is not quite there, so it's just a 1 hour extension. M5 reversal alert is just about to happen. Has happened if you don't use wicks to the left. I don't have that on. Normally, the wicks to the left, when we're on slightly more volatile conditions, I usually have the wicks to the left on because what I want to do is encompass the move before the push. So the idea behind the reverse alert is the last up candle before we make a low is the order, is the last sort of batch of bullish price action, if you like, before we make that low. And I like to encompass the move before it to give you that real confidence that, yeah, that's a big, strong break. When we're in slightly tighter conditions, as we are at the moment with these constricted ADRs, I've had this turned off, and I've just realized on this new platform, this new MT4, I didn't have that deactivated. It gives you the reverse alerts a bit quicker, and I usually recommend this for scalping, and obviously also using aggressive mode. But so yeah, you've had the reverse alert there. If you wanted to wait, obviously, for a break of that, you didn't get it. So that's why we use wicks to the left, yeah? Because the initial break you often find is a lot of buyers coming through and they get exhausted and then they take a second run up. So that is your kind of real confirmation. You get the W pattern before the reversal alert. If you don't use wicks to the left, New Zealand CAD has hit its weekly range. You get your sort of W pattern after a lot of the time. This one is actually not a very good example, but you get your W pattern afterwards, if I could draw it properly. Yeah, that makes sense. There's no right or wrong, it's personal preference, but personally I usually like to have it off. And as I was looking at that thinking, why is that not alerted? So yeah, Euro New Zealand. Looks like a good looking long opportunity down here. We're nicely extended on the hourly. Good pullback out of propulsion. Buyers are stepping in, so it looks pretty good for a long. This is a tricky one, this propulsion gap. I personally think we're going to move back up into that and retest that a little bit stronger. However, it might push down and take that liquidity first. So good way to find out is have a look at sentiment, see what the Euro New Zealand is. No sentiment either way. So no advantage either way with Euro New Zealand. We're neutral. 59% long, 41% short. So I would be looking a little bit actually more short on this because the market is long on it. The liquidity is under there. Might still have some longs left from Friday last week. I think most intraday traders will be out by now. This is what I was talking about yesterday, remember? Climbing up the stairs and falling down the elevator shaft. Yeah. Climbing up the stairs, falling down the elevator shaft. The reason we get these flushes is because, like I just said, if you're an intraday trader and you're long, yeah, it breaks that high and you go, brilliant. You get an accumulation, a load of more people add their longs in there, right? So you're sitting here, let's say you got in somewhere on Friday long, doesn't matter where. You see this push up on Monday, you see it push up on Tuesday, and what you see then is that wicks to the upside, and you see a 3-bar reversal going. So you see a push, an inside bar, and then a pull to break that low. Reversal pattern. Yeah. So what does everybody do that's in these trades? They go, it looks like it's coming down, boys. Let's get out. So they start exiting their positions. So the people that are long are hitting the short button. They're hitting the sell button to exit their positions, which drives it down a little bit more. More people see that it's coming down. They see their P&L shrinking, so more people enter short. Then you get a structure break and everyone goes, hey, I'm going to enter short. So I'm not getting out of my long position. I'm actually getting in short to go down and make my money that way. So that exponentially increases the speed that the sellers get added to the market. And that's why you get these flushes. This is why we get that movement. Bang. But it's a phenomenon that really works much better on sells. And I think it's just human nature that we think things come down faster than they do when they're going up because of gravity. Yeah, it's just, you know, this market is humans. Humans are driving this market. Whether you're working in an institution, a hedge fund, a prop firm, whatever, you're a human being and you're pressing buttons. So at the end of the day, that's why these flashes happen. So we always get that phenomenon. Where it stops is that's the tricky part when you get these parabolic downside moves. So we've stopped there. There is likely some liquidity at the lows there. Whether or not they need to take it, don't know. But at the moment, there's less than 60% of the market are actually long. So I would say there's less liquidity there than there is there at the moment. So we might get that sort of movement and then back up into there. So that would be the play for Euro New Zealand. Pound New Zealand. Seymour, my ex-wife once asked me, who the hell is the Swiss franc? She thought I was colluding with a shady guy in some sort of money laundering. Who the hell is the Swiss franc? Yeah, I wonder if that's gone through my wife's head when I've said, I got to go, we got news from Swiss franc. You never know. Pound New Zealand extended. So again, that's just a 1 hour RSI extension. It's not extended on the 4 hour. Market structure at the moment on the pound for some unknown reason is long. I think this is probably, now we've broken back down below there. We didn't just break yesterday. Again, look, climbing up the stairs, falling down the elevator shaft. I don't think this is going to be a sustained move to the upside. So I would be looking for pullbacks and drops on this. That's a big propulsion. I'd be very surprised if we don't fill that. However, I would also not be surprised if we dropped and then came back up to try and attack that later next week. So we'll see. But right now we're extended on the hourly. 4 hourly, if you have a look at it, we're miles away. Yeah. So if this is going to be a structure break, we've just had the 4 hour reversal alert on it. If this is actually going to be the structure break that starts this movement downwards on the pound, we'll be looking for that sort of movement, yeah, to start a new structure to the downside. So, you know, it's the old head and shoulders pattern, yeah, market structure reversal. So anywhere on a pullback, I'd look to probably get in short. However, if you want to take the mean reversion, obviously, then hourly and take it now. So nicely extended, wait for a reverse alert to go long. Personally, I want to be shorting the pound, so not ideal, but it's still a good mean reversion opportunity. Your reversal alert is pretty tight on it as well. So if you wanted to cover it, once you've got sort of, that's not even half an ADR. Half an ADR is 87. So up there, before you even make that high, if you covered it, just in case it does drop again, you should be safe. All the New Zealands are extended, every single New Zealand pair. So New Zealand Swiss is the only one on the 4 hour that's extended. Everything else is also extended on the hourly. So we've got a 4 hour extension on New Zealand Swiss. But looking at all of these on the hourly, they are all parabolic. Again, I'm not quite sure exactly why these are parabolic. There's no real news that I can see. So it is just a lot of money coming into the New Zealand dollar. So fair enough. If they're going to do that, that's fine. We'll expect to see some strength in the New Zealand dollar. So if we look at all of those, just turn the filters off. So all your New Zealand dollars are a buy. Yeah. So New Zealand CAD, New Zealand Swiss, New Zealand Yen. New Zealand US is a range bound at the moment. There's no advantage COT, there's no advantage retail. So it's just negative on the fundamentals. So we're selling Aussie dollar, New Zealand, Euro New Zealand and Pound New Zealand, which means that is strong New Zealand, short the rest. And we're buying everything New Zealand. So it is a full on buy. So want to be looking really for pullback longs on it. Back into propulsion and then start to get long from there. We've had this strength coming through at the moment on the Canadian dollar and the US dollar. So I think with these, if you take these mean reversions, there's a good chance they're going to work out today with the PMI figures on the US. So we've got all these extensions. We're going to get some kind of pullback, some kind of profit take move. 2 solid days up is long enough, isn't it? So I think these are going to come down very, very soon. If you took a reversal alert yesterday on the ADR hit, basically you would have got in somewhere around there. And obviously you're just going to enter your second position here because we're an ADR on. So they look pretty good for shorts, all of these. So just wait for M5 reversal alerts across the board on these. New Zealand dollar Swiss is just about to get one. New Zealand dollar yen, you've had one and the reversal retest. And New Zealand dollar US dollar, not far away either. But they're all 100, 125 ADRs. They're all massively extended on your RSIs. So all good opportunities for shorts, all of them. DAX has come down, stopped out of my DAX longs. This market is flat as a pancake at the minute. It's really nasty. She made Miss Swissy. She is Miss Swissy. Don't remain a tadpole. Took some scalps this morning. I'm in Asia using your market reversal alert indicator along with my own analysis. You have created some quality tools. I only create quality tools. Although I'm starting to lose faith in my quality tool opening range breakout. It's only because I'm watching it. But, it's working very well, but it's frustrating as hell as a strategy. The reason I'm finding this so frustrating, the ORB, although I know it's got a good edge to it, and it's, you know, it's made me $7,000 this month, which I'm going to draw out of my funded account. So I can't complain, but it is bloody annoying to trade because it uses a stop loss. That's the only reason I'm finding it frustrating, because I've spent the last 3 years not trading with a stop and happily banking money consistently, and I'm just struggling to lose money. I hate losing money, and this loses money. Yeah, it has down days and down weeks. Look, this account's $1,300 down, $1,100 down. But what I'm seeing a lot is profit, no profit, profit, no profit, and then you get that. Yeah, and that's how a normal P&L works. I'm just not used to seeing that. I'm used to seeing my P&L only goes up. That's what I'm used to. So, yeah, it's annoying. You know, I was running this experiment. So quit watching it. Yeah, I know. This is the thing. I can't though, can I? Because I'm in here all day watching it. This is a problem. Anyway, what company do you use for your funded? My Forex funds and E8 I use for funding. If you're in the US, yeah, it doesn't matter where you are. So if you go onto the website up here, click there, my stuff recommendations. I'll send a link. Here you go. There's a link. So there's links in there to the firms that I use myself. I use RoboForex as my broker now, although I'm possibly changing brokers again. But my Forex Funds is my main prop firm. E8 is my other prop firm. E8 is a little bit like my backup prop firm for emergencies, but I do do evaluations with E8 quite regularly, and I've got one funded running at the moment with them. And then for futures, Take Profit Trader or Apex. That was the bias scorecard, wasn't it? So yeah, just on a quick note on this. This is the hedging set file running, right? And your personality cannot see losses. Yeah, no, that's exactly why Big Papa, I created the position trading bootcamp, and why I trade as I trade without a stop, because. And I don't class myself as anything special. I'm no different to everybody else out there. I'm a human being, and human beings don't like losing money. And this is why 95% of traders fail, is because of the psychology. And trying to fix the psychology is virtually impossible for most people. You know, to change yourself and make yourself into the type of trader that can handle regular losses is a very hard thing, which is why removing the stop loss removes the psychology aspect. If the psychology aspect is removed, you just become comfortable and you make money. Yeah, that's why the bootcamp works. And this is the problem. This is the first strategy I've developed in the last 4 years that uses a stop loss. You know, and it's like going back a step for me. It's weird. I know it works. It's got a long-term edge. It's just very hard you know, after going through this, you know, looking at you know, having P&Ls like this, constantly green, to going to P&Ls that have 3 or 4 days of red in it is just weird. It is. It's just weird. It's just, you know, but I'm finding it quite tricky to watch. Do you like E8? Yeah, I love E8. E8 are fine. Broker, good execute. The only thing I'm interested in, Gordy, with prop firms is execution and spread. So if they've got a tight spread and they've got very fast, virtually instant market execution, I'm happy. That's it. They're the two things I look for. And obviously, as long as their rules are okay, that's fine. So yeah, nothing wrong with E8. I say on the website, actually, the reason I like them, we'll go and read the website. You'll find out why I like them. But my Forex funds are my number one. So you got 5-day and 5-day for phase 1 and phase 2. So it's 10-day to get funded, which is easy. Although I'm somewhere usually between 12 and 15 days, really, to get funded. And they are the cheaper of the ones out there. Yeah. So price-wise, they win. The only reason E8 is number 2, yeah, is price. Yeah, they are more expensive by not much. We're talking $50, $30 depending on the size of the account. So it's not a lot. In the grand scheme of things, it's pretty much irrelevant. But the thing I like about E8 is there's no minimum days. Yeah, so you've got 1-day rule. So you can pass in 1 day if you want to go over leverage. And that's the reason I use E8. If I have a problem with my funded accounts, and I have had where I've blown multiple accounts at the same time, I have to wait. And this is the problem with prop. When you blow, you then have to wait somewhere between 10 to 20 days to get your money back. So can you imagine doing a job, right? And then someone turning around and saying you can't work for 20 days. Oh, and you're not going to get paid. What? Can't have that. So E8 are my emergency firm. If I take 5 evaluations with E8, I will get 1 funded, guaranteed, pretty much. More than likely, I'll get 2 funded or more. So it gets me instant funding. Not instant, but I'll get my account within a few days rather than having to wait 10 to 20. So that's the reason I have them as well. I have less accounts, less evaluations running and less funded accounts with E8 than I do with my Forex funds. Excuse me, I've got a snotty nose. That's the only reason. Anyway, I was going to talk about this. I close my winning trades, then see them goes to reach TP after an hour. It's best not to babysit them. Yeah. Check them once in a while. I don't check my account. I check my accounts once a day. My position trading accounts. I check them once a day. The EA runs it for me, so I don't have to do anything. The EA is literally running the whole thing for me. So if you watch a trade, you'll be tempted to get out of it. Problem is you don't really remove the psychology of risk. You just shift it from stop loss to drawdown, and you still sometimes need to deal with the drawdown. Yeah. I'm really good at that, but not easy. Yeah, it's just the drawdown. The thing with the difference, I think, psychologically between position trading and stop loss trading is this is unrealized. This is realized. So when you have a $10,000 account, for example, and you make a 1% loss, you are down to $9,000. Oh, sorry, $9,900. Right? So you've now got your psychology, your brain is now thinking, I have got to make that back before I can start making money. So when you use a stop and you get stopped out on positions, so let's look at the sentiment EA today, for example, right? It's sitting at $480 in loss, right? But it's sitting in $332 of profit with one position sitting at 498, which bank that and I'm back to square one, basically, aren't I? So because it's realized loss, your psychology is on catch-up mode, which makes you anxious. It makes you do stupid things. It makes you over-leverage. It makes you take profit faster because I'm going to shut this out quickly now because I want to get back to square one. If you'd have let that run to its $750 target or whatever it may be, you're actually in profit. But you won't. You'll shut it out. And that's what the psychology does when you have a realized loss. An unrealized profit or unrealized drawdown, it doesn't affect me psychologically in the same way. I just literally don't care about it because I have seen this thing go up and down from plus 2% to minus 15% on a regular basis, month in, month out. And I know because the market fluctuates, this is going to fluctuate. When that goes into a negative, there's no fluctuation to get me back. That's the psychological problem. That's what you remove with position trading. You become accustomed to this. This becomes the norm. Like I keep saying, you know, oh my God, I haven't got any exposure on. That's my focus. Why am I not exposed to the market? If I haven't got a negative number here, I haven't got any exposure on. If I haven't got any exposure on or risk on, I can't make any money. That's the way I see drawdown. It's just a different way of looking at it. You just got to refocus your brain. And that's the problem I'm having with the opening range breakout EA. I'm seeing realized loss and I'm just not used to it. It's just hard to get your head around. But you just got to like you say, stop looking at the bloody thing. Just let it play out. You know, I had a $5.5 grand win last week. Thank you very much. It completely wiped out any losses and put money in the bank, and it's there for me to take out. But I've got to wait a day for it to happen. And that's the other thing that's frustrating about it, is you only get to trade twice a day at a set interval. Whereas this is just getting me in and out of stuff all day long, and I'm seeing this going up and down, up and down. It's lovely. Anyway. If my Forex funds max daily drawdown based on your initial balance, equity, or balance, it's based on your equity and your balance, depending. My Forex funds give you in the back end of my Forex funds, they will give you a figure you cannot go down below for your equity and for your balance. So it's all shown to you every day. It's balance and equity. But your daily drawdown is calculated at the start of the day on the equity at the start of the day. So your equity will change through the day, but your drawdown from your daily equity that changes does not affect you. With Apex, it does. Is it allowed to use your EAs for my Forex funds? Yeah. Total drawdown limit based on initial balance. Daily drawdown limit based on day's starting balance. Yeah. Highly, for some reason, the opening range breakout EA didn't draw a buy order on the second high. No idea. Make sure, I have no idea. It's impossible to have a look in your journal. So go to your journal and have a look in there. Can't see the journal on this. There you go. Bang. Wasn't maximized. So go into your journal and just see if there's anything in the journal tab or the experts tab that will give you any clues. Yeah. There may have been a problem placing the order for some reason. So yeah, sentiment EA. Sorry, I was just going to look at this one first, but look at this, 18 grand. We only started this middle of last month. It's sitting in 12 grand, 15 grand a drawdown. But this is the hedging EA. And I set this up as an experiment. So this is the market reversal alerts in EA in hedge mode. I set this up as an experiment to monitor drawdown maximums and minimums, not minimums, maximums. So I could see how high we were getting. So I've been checking this on a regular basis so to see how high we actually got as a maximum. And so far, I've got to 2.3%, yeah, on one instrument. And that's because actually we've had some really, it was on pound pairs because we've had some really big pound squeezes. And I'm doing this because I'm interested in, with the current settings, half an ADR, how much I get as a drawdown, because I'm looking at implementing this on the hourly charts. But I obviously never run it on every single instrument because your exposure is too big. But what I'm seeing is actually the hedge file, the hedge set file, this has got up to 19%. I might set this up as a signal actually, so that I can actually monitor it a bit more accurately. But this has got up to 19% in drawdown. So 19% of the account, which, to be honest, if you're a hedge fund, hedge funds will go into anything up to 25% drawdown on their portfolios and not really even bat an eyelid, because it's the norm. It's drawdown. That's what happens. The market goes up and down. When you're hedging, what I'm finding is this is consistently sitting somewhere between the sort of 10 to 20% mark, right? So I'm going to continue to run this as an experiment, because we're now up to 18% profit on the account in the last 3 weeks. When did this start? When did we do the balance on this? 12th of February. So, yes, about 3 weeks, isn't it? So in 3 weeks, we've made 18% return with a maximum drawdown of 19%. So I'm going to keep this running for the next month or so as an experiment, because if this can stay stable within 10 to 20% drawdown, and it can bank 20% a month, yeah, if we can run that for 5 months, and it is stable within those parameters, what we've done is we've doubled the account in 5 months, which this means this has got the possibility of trebling an account in a year. This is on 100, running on a 100k account. So if I can get 300k out of this in a year, and it doesn't blow, I'm happy with that. When it blows, which I don't know if it will, and this is what we need to monitor, because this is doing drawdown control, remember? So it's taking losses, yeah? So it's never going to get, I don't think, because of the drawdown control on this, I don't think it's ever going to get more than sort of 25, 30% in drawdown, because it's going to continuously take losses, isn't it, if it squeezes too hard? So I really want to see what happens with this in a squeeze. But these figures are astronomical. And I've never run the hedging set file on M5 on every pair. I've always run it on a portfolio with controlled exposure. So it's always had a maximum of 2 on each. Yeah. So we've only had 2 CAD positions, 2 US positions, 2 Aussie dollar positions running. And obviously what it's done in the past is it makes money, but not to that extent. That's ridiculous. But these drawdown percentages that I'm seeing here were actually the same drawdown percentages that were achieved by running it with a normal exposure of 2 per instrument. So if this can stay stable, and I think it can, because what's happening is we're riding the waves of the market, right? Yeah. So as we push up, we're banking profit. And as we're pushing up and going into drawdown, we're doing drawdown control. But the drawdown control is always less than the profit banked because it's a hedge. And then we come down and we get out of the ones that we've been doing drawdown control on. Yeah. And we go into drawdown on the opposite direction. We start doing drawdown control. And then we go like that. So as long as we get continuous moves up and down, and if we go into a range, happy days, we're going to guarantee to win on everything with getting very little drawdown and very little drawdown control. I think this has got the potential to, double, treble an account a year and actually stay within these limits, because it is, it's not as we're not using a stop loss. Although we're not using a stop, we are using a stop in the fact that we are using drawdown control to scale out of squeezes. So we are actually doing stop loss. It's just we're doing it in a different way, aren't we? But look at that. 3 weeks, 18%. So I'm going to see if that gets up to 30k in the next 2 to 3 weeks, and that remains stable. I think I found the Holy Grail. Mr. Wick. So yeah, anyway, I'm going to leave this run as an experiment. This isn't the purpose I was running this, but now I'm running this. It's answered the questions that I had, which was what's max DD? So in 3 weeks, we've got up to a couple of percent of DD, which is what I was expecting. So the reason I wanted to find that out was because I was testing the drawdown control settings. When I transfer the same drawdown control settings onto the hourly time frame, I know that those drawdowns will be lower or the same as worst case scenario. I'll have less entries, less drawdown, and less profit on the hourly time frame than I will on the M5, but it'll be more stable. That's what I'm looking for. I'm looking to run a stable hedge strategy. But blimey, this is working well on M5 at the moment. And we've had some serious squeezes, yeah? So this has been trading every instrument, yeah? Some of these instruments that this is trading at the moment, yeah? Look at what we're getting. We're getting 150 ADRs. We're getting weekly ranges hit within days. We had monthly ranges hit. So we've had squeezes. It's traded through squeezes in February. And it's absolutely fine. So anyway, we'll see. But what I wanted to show you was the sentiment. Can you please run through your entry exit lot sizes? What, on the hedging? Right, so oh, it's just banked something else, look. Hold on. I'll save the set file. You in Telegram, John? I'll pop the set file in there so you can see it, but I'll run through it. M5 all instru. Why are you not typing? M5 all. Oh my god. VPSs. Instrument hedge. I'll call it that, and I'll put it in Telegram if you're in Telegram. You're not in Telegram, right? Get into Telegram group. If you haven't got Telegram, there's the Telegram group. I'm just going to copy those over to my desktop. One sec. Yeah. Banking, constantly banking. So basically, what this is doing, it's using the old normal M5 hedge set file that's on the Telegram on the blog post link from the product page for the market reversal at EA. So it's using half an ADR as an entry, yeah, as a risk parameter. It's using the RSI 14 70 30 to get in. So on the M5 time frame, we are using the 70 30 RSI, so it's getting in when M5 is extended, basically. Which means that, you know, because obviously M5 is a fast time frame, you get extended on RSI quite often in the same day. You'll get both extremes, which obviously gets you into the hedge. There's no other filters used at all on it. And it is using a 1.3 lot multiplier, which obviously keeps the average closer because it's a small time frame and we get more movement within the time frame. It's using the 1.3 multiplier to make sure that we're getting ever so slightly larger. So it's not martingale. Martingale is 2. Martingale will kill you immediately, especially if you don't use any drawdown control. So do not. I've tried it. I've tested it. Don't. But what it's doing is 1.3. So it's getting in with ever so slightly larger, 1.3 larger, or 0.3 larger, rather, positions. Yeah. And it's also scaling out of them. So the 1.3 multiplier, half an ADR apart. Yeah. The profit is half an ADR. So it's getting in half an ADR and it's targeting half an ADR. So what this means is when you get into one position, you take a second position. When that position returns back to the initial position, both are closed at a profit. Yeah, so it's looking for a half an ADR move back in the opposite direction pretty much all the time. And the drawdown control is 0.75 of an ADR. So remember, we're getting in, we're scaling in half an ADR. If it continues to push, the first position will take 1/3 off when it moves 0.75 ADR away. Yeah. And if it continues to push further, this position will then close out a third of itself when it gets to 0.75. If it's moved 1.5 ADR away, this one will take a second drawdown control. So again, we're scaling out regularly when we get to 3/4 of an ADR on every single individual trade. And then we're just waiting for 1/4 of an ADR move to the downside to exit the lot. Yeah. So that's what it's doing. And it's obviously doing that in both directions because it's a hedge. So those are the settings. I'll post it in the Telegram group. Let me just put hedge set file experiment running in the live room for MRA EA. Okay, so I've posted it in the Telegram group. I don't think I can post set files in here in the YouTube. So yeah, that's what it's doing. Morning, Philip. I'll have to send you a screenshot to start strat now. I can use Telegram. All right, yeah. Right. So yeah, so that's that file. That's that set file. So you see, it's banked $1,600 now. Yeah. So we're still sitting on 12% drawdown, 12.8% drawdown. We've banked 17.9. It's just done some drawdown controller. There you go. Live on air, as we were talking about drawdown control, it's just done some. Oh, come on, just grab the bloody line. There we go. So yeah, see, so it's constantly doing DD control. Yeah, 1st of March. Yeah, drawdown control, drawdown control, drawdown control, drawdown control. So it's taking losses all the time, but then it's going bank. New Zealand, US, it's banked. So it's banking every day, but every single day, you know, I'm not using a stop loss, but I am scaling out of the positions. So, you know, all the hate mail I get in Telegram and YouTube and everywhere saying, not stop loss trader, you're just going to blow your account. It is doing drawdown control. And this is what I do on a regular basis. This is all what's taught in the bootcamp, right? So there's lots of losses being taken in here. Just because I don't use a stop loss does not mean I don't take losses. Still a responsible trader. Yeah. So yeah, there you go. But we'll see. We'll see if this blows. Yeah, this is the I'm going to blow the account experiment. There you go. It's just taken pound New Zealand, just taken some more losses. Look, more losses. Consistently taking losses, and it alerts me every time, just to annoy me. So you see what it's doing. You see, look at this drawdown. Look, we were on 12.8. We're now on 12.6. So it's stable. This drawdown level, I think, is going to remain stable, and it's just going to keep taking those losses over there and keep chipping away, chipping away, chipping away, big win, chip away, chip away, chip away, big win. That's why we're getting positives most days. The odd day you'll get, market doesn't go your way, tough. Profster, have you seen New Zealand US? I have, yes. Is that a question? What about it? 150 ADR. Yeah, you got 150 ADRs running across multiple New Zealands at the moment. It's on a mission. So really good mean reversion opportunity, look. Yeah, we will start mean reverting soon. So get on it. Get on it. Nice shooting star going in on the hourly. Starting. We've only just started the hourly candle though. So, right. So yeah, quickly just covering the sentiment EA, the changes I've made to it. So what I did yesterday was I closed out all the positions that we were running on the previous version 2 of the sentiment EA. This is now version 3 of the sentiment EA. So what this is doing is it is getting in every day, literally all it is doing is so simple. It's getting in every day. It's not using first profitable close. So I'm not testing the first profitable close version of the strategy we discussed yesterday. I am testing basically just taking entries every day at 1 a.m. Yeah. So 1 o'clock in the morning, basically it takes a trade, as you can see there. So it took a trade this morning at 1 o'clock in the morning. It puts a stop loss 1 ADR away. Yeah. And then it trails that stop loss by 1 ADR. So as price moves down, the trailing stop trails by 1 ADR. So what we're doing is we're getting in line with sentiment. So sentiment at the moment on this is long. 71% of the market is long. So we're looking to take a short entry. So what it does is it gets in and it places an ADR stop. And assuming that we are going to get our sentiment move today at some point, as long as we don't pull back by 1 ADR, we will go down. You then have the option, if you want to, within the EA, to bank that profit today. So you can set it up to use first profitable close exit either on the H4, I would recommend, candle, or the daily candle. I'm not using that at the moment. I'm just using a trailing stop. Obviously, if you're going to use that setting, you probably would not use the trailing stop setting, one or the other. I'm also targeting 60. So because I'm testing it, I'm using a slightly lower sentiment extreme. So this 60 is where we get a +1 on the website. Yeah. So on the website, on the sentiment. So this basically on the retail sentiment page, when I get to it. There we go. So when we're over 60, yeah, we get our bias +1s. Yeah. So what I'm saying is use the +1s, which is anything over 60 or under 40. Yeah. So under 40 gives us a -1. We've got 40 over 60 long, we get a sell signal, which gives us a -1. So I'm doing the not so strong ones, if you like. So I'm saying just take the weak sentiment trades, but take them all because I want to test it. So that's basically what it's doing at the moment. As you can see, got in there on a sell. This is yesterday. So when I placed the EA yesterday, it took some sells on some of these. But most of them, as you'll see, Aussie, New Zealand, it took that sell there. Yeah. So everybody is long Aussie, New Zealand. So obviously it's coming down like a steam train. So it placed the order, trailing stop has kicked in, and blah, 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 blah. So we've locked in the profit there and we're all the way down here. So it's in profit, obviously. Aussie dollar yen, there is no sentiment either way, so it's not taken a trade at 1 o'clock this morning. Aussie dollar Swiss, there was a sentiment on this one. This one I think closed out, didn't it? Oh no, hang on. Aussie dollar Swiss, that was a 10. Why did that not trade then this morning? I have to check that one. I don't know why that one didn't take a trade. It's a 10. It should have taken that short, shouldn't it? Oh well. Have a look at that. 32.68. That should have gone long on the CAD yen. Why did that not go long? Okay, so we've got a problem. I need to check this for bugs. Not taken that either, is it? CAD Swiss. So some it's not taking. Let me just check. $60. Entry day. 01. 01. That should be fine. Okay, so I don't know why that's not taking trades, that one. Swiss yen has on a 34. That's right. 23. So that's taken a short. 33. That should have traded as well. Some of these aren't trading for some reason. I need to check this. Got a bug. Operation speed details. Why didn't? So that's modifying stops, isn't it? Okay. Sorry, bear with me 1 sec. Just trying to find 1 a.m. this morning. It's the first, isn't it? 7:56 this morning. Why have I not got any data going back? Did my VPS have a wobble this morning? Why is it not logged those orders? Okay, something's weird going on. I'll have to check into this, but it's taken a lot of them. I don't know why it's not taking all of them. Let's just have a quick look at the pound CAD as well. So we've got Euro Swiss and Euro Pound. Yeah, Euro Swiss. That's fine. Euro Pound. That's fine. Sentiment was 23. But yeah, anyway, so this is what the EA is doing. Why it's not taken some of these trades, though, I will need to investigate. See, that's a 77. Let me just check the sentiment. Pound Swiss, 77.23. Pound Swiss, 78.22. That's fine, so it's roughly right. 54, 47.53 on pound US. Yeah, so that's range bound. 58.42. That's right. Yeah, pretty much right. The date is going to be more up to date on the website than it is on here because it's only checks once an hour. Okay, but yeah, anyway, so that's what it's doing in theory, most of the time, what it should be doing. But for some reason, sometimes it doesn't, which I'll have to have a look into. So yeah, it's got all the options there basically for deciding on whether or not you want to bank end of day or not. But you know, we need to run it and see what happens and make sure it's trading, obviously. But I think this is a much better way of using it than the way we were using it or was testing it before with using yesterday's high, yesterday's low, because this literally just gets you in line with sentiment. That's all we want to do, don't we? We're expecting today the market to do that because the retail crowd are doing that. Just get me in, and assuming it does that, excellent. If it doesn't do that, stop me out. But stop me out, I'm using a trailing risk. So you're going to stop me out with small losses, but when it works, the sentiment, yeah, in the testing on the sentiment, this is banking $1,000, $2,000, $3,000 when we get a sentiment run. So it's basically looking to get into a trend in line with sentiment. You see the TPs on this. The only TP I've got is 2.5% of balance. So when we get to 2.5%, it will close the position out, 2.5 grand basically. So I'm either going to get taken out with a trailer, or I'm going to make 2.5 grand per trade. So 2 or 3 of these land in a day. That's all you need. So we'll see. But yeah, I'm running this as a test, and we'll see what happens. I need to figure out why that hasn't traded. There's obviously a logic problem somewhere, and I can't think what it could be. The only thing I can think is that the VPS had a wobble when it tried to execute all the orders. The trouble with running multiple pairs on an EA like this is, especially time-based, every single EA is triggering at exactly the same second. So what you can quite often get is a bottleneck where the VPS and the MT4 can't execute the orders because it just can't process them all at the same time. which might be why we've only got some of these processed. So what I'm going to do this morning is just go through all of these, and the ones that didn't trigger, I'm going to see. So a fix for this, if that is the issue, is to basically run a check every 5 minutes from 1 o'clock or whatever your time is. And basically, if there's no order placed and the sentiment is correct, place an order. So what will happen is if it's a bottleneck issue, running that check every 5 minutes, every 5 minute candle close, we'll get over it. But I'll have to see if that is the issue. Because that's why it's logging this and putting this here, so I can see that the sentiment at the time when the trigger fired was 29. It is still 29 at the moment, which means we want to be going long. Because the market is short, yeah? 71% of the market is short, so therefore we want to be taking a long. Look what it's done today. Just didn't get the bloody trade. Anyway, it's a demo. Right, there you go, there's sentiment. So for those of you who are interested in that. DAX today is just peeing about, flip-flopping. So small loss on the DAX today, unfortunately. Well, it's actually not a small loss today, it's a big loss. Biggest loss so far, actually. But look, just it will get out, it will get fixed. It's just, I hate seeing negatives in there. It's not what I'm used to. Right. Segar, have you worked the best pairs with the market reversal EA hedging set? Would the DD be reduced if less pairs were used based on performance? You can't, there's no such thing as a best pair. If you pick a best pair, you're curve fitting. So you can't do that. The market goes up and down. Yeah. So it doesn't matter which pair you put it on, it will hedge. And the settings are dynamic by ADR for the instrument. So every instrument's got a different ADR. Yeah. So all the EA does is it adjusts itself to enter the positions and target ADR. So pips are irrelevant. Obviously, we know we don't use pips. Anybody that uses pips is just off the nut, because you can't use pips as a measurement because everything's got a different pip value. So if you make 500 pips on one thing, 500 pips on another thing might be worth £2, might be worth £1,000. If you trade, I can make 5,500 pips in a minute, no problem. Just put it on the US dollars R. Does that mean I'm making any more money? No. Rubbish, isn't it? We don't use pips. It's all covered in the bootcamp why we don't use pips, but we use ADR. We use percentages. So everything's got a separate ADR. So therefore, it doesn't matter which pair you put the hedge onto. You just need to control risk. So if you want to control risk, yes. If you want to keep your drawdown low, not sure whether that makes any difference. If you're doing drawdown control at a regular basis, yes, you'll have more drawdown with more pairs potentially, but you can still get into a squeeze. The problem you're going to get is limiting the pairs is you're also limiting your profit. So, but I've only ever run the hedge set file with two exposures per instrument, per currency rather. But the problem is doing that is, as you can see with the New Zealand dollar, you could get hedged into just short positions and never actually get a signal to get the opposite hedge on and go into a squeeze, in which case then you're just going to go into drawdown massively and never bank. Whereas when you're running multiple pairs, you will always bank. So it works much better. Well, at the moment, I'm saying this is a test. We'll find out, won't we? Papa, your strategy is like running a shop. You need capital for inventory. If the product reaching expiry, you either sell it cheap or throw it. But you need high volume sales, low profit margin, but high volume sales, just like how China retailers run businesses. Yeah. Yeah. But position trading is all about regularly banking money. That is the key. If you do not bank, yeah, and you do not have an element of profit you can use to offset against drawdown, that's when people get stuck with position trading. So you've always got to make sure you're banking regularly. Yeah, and that's why I use the EA, because the EA basically does that for me. It takes it out of the equation. Art, are you using an algorithm bot? Yeah. Well, in this case, yeah. I'm using lots. Yeah, go to the website. My EAs are all there. And my strategies are all there. And my bootcamp is there. Everything's on the website. It's all free. Well, the EAs aren't free, but all the training is and the strategies are all free. Right, that's all I've got for you this morning. I'll be back this afternoon for New York. New York's going to be tricky. We've got Bailey talking, actually, in half an hour as well. So with your pound pairs, be careful. Oh, that trade's worked out an absolute beaut, look. At the moment, nicely in profit. Yeah, so be careful with your pound pairs. 10 o'clock, we've got Bailey speaking. He may well pump or dump. So we might get some big volatility coming in half an hour on the pound. The open this afternoon for New York, I would concentrate possibly on the higher set files, 5, 10, 15, might work okay. Pre-market, I'd be a bit careful with, because I think we might have either a whippy or a quiet open, because we got major US news coming 30 minutes after market open. No, they can't be running futures. Futures is, you don't use MT4 for futures, do you? It's a totally different platform. You can, you can do the strategies. The strategies you can run on anything, yeah, of course you can, but you can't run the EAs because you need MT4 or MT5. Unless you're using AMP futures as your broker with MT5, you won't be able to use the EAs if you trade futures, but I don't trade futures. Well, I do trade futures, but I don't trade futures in here. It's all on the website. Go and look at the website. PMIs have just come out for the UK. Positive. Wow. Look how excited the market is about those positive figures for the pound. Yeah, so watch those, and obviously watch your set files for the DAX for this afternoon, because I think we might have a tricky open today. Right, so I will leave it there. Anything you need, come in the Telegram group. I will be in there this afternoon, all day actually. And I'll be back at 2:20 this afternoon for the New York session. We'll have a look at how everything's going. I will look at the sentiment EA this morning and figure out why that hasn't fired all orders, and see if I can put something into place to make sure that we can get those trades on somehow. So yeah, anything you need, let me know. I'll be back this afternoon, 2:20 though, for the New York session, and watch your pound pairs this morning. All right. Have a good day. I'll be back this afternoon. Hopefully see you then. If not, 7:50 tomorrow morning for the London session. All right. See you later.